Welcome to this video on investing. Many people believe that investing is only for the wealthy, but that couldn't be further from the truth. Investing is for everyone, regardless of their income level. In fact, investing can be one of the most powerful tools for building wealth and achieving financial independence. In this video, we'll show you how easy it is to get started with investing, even if you're a beginner. You'll learn about the different types of investments available, how to choose the right ones for your goals, and how to manage your portfolio for maximum returns. So sit back, relax, and let's get started on your journey to financial success. It's important to remember that investing is a vast and complex field, and watching a few videos won't make you an expert. There's always more to learn, and it takes time and effort to develop a comprehensive understanding of investing. So keep an open mind, continue to educate yourself, and seek out the guidance of professionals when needed. So before we get started, like this video, subscribe to the channel, and hit that bell icon for pop-up notifications for my next videos. Let's get started. Nearly all investments can be categorized into one or more asset classes, which are broad categories of investment types that have similar characteristics and behave in similar ways. The main asset classes are stocks, also known as equities, bonds, also known as fixed income, cash and cash equivalents, real estate, commodities. By understanding the characteristics of each asset class, investors can create a diversified portfolio that balances risk and return based on their individual goals and risk tolerance. Number 1. Equities. A popular investment option because they offer the potential for high returns over the long term. Investing in equities involves buying shares of ownership in a company, which entitles the investor to a portion of the company's profits. One way to invest in equities is through a brokerage account, which allows investors to buy and sell stocks online. Benefits of investing in equities include the potential for capital gains, the ability to diversify a portfolio, and the opportunity to participate in the growth of individual companies and the broader economy. Equity prices are determined by supply and demand in the market and can fluctuate rapidly based on various factors, including company performance, economic conditions, and investor sentiment. Equities are traded on different stock exchanges around the world, such as the New York Stock Exchange, NYSE, in the United States, the Tokyo Stock Exchange, TSE, in Japan, and the London Stock Exchange, LSE, in the UK. Each exchange has its own rules and regulations, and investors can choose to invest in stocks listed on different exchanges based on their goals and preferences. Number 2. Fixed income investments. Those for investors seeking a steady stream of income and lower risk than equities. Fixed income investments include bonds, treasury bills, and certificates of deposit, which pay a fixed rate of interest over a set period of time. Investors can invest in fixed income investments directly or through mutual funds, exchange-traded funds, ETFs, or managed accounts. The benefits of fixed income investments include regular income, principal protection, and lower volatility than equities. To invest in fixed income securities, investors need to understand the credit quality, duration, and yield of the securities they are investing in. It's also important to have a well-diversified portfolio with a mix of different fixed income investments to manage risk and maximize returns. By understanding the risks and rewards of fixed income investments and developing a solid investment plan, investors can achieve their investment goals while minimizing risk. Number 3. Cash and cash equivalents. Who want to build up their savings and create an emergency fund by keeping a portion of their portfolio in cash and cash equivalents. Investors can ensure they have easy access to funds when needed and also earn a small return on their investment. While the returns on these investments are typically lower than other asset classes, they are considered to be very safe and can help to provide stability to a well-diversified investment portfolio. Number 4. Real estate investing. Investing in real estate involves buying, owning, managing, or selling properties for the purpose of generating a return on investment. Real estate investments can include residential properties, commercial buildings, land, and real estate investment trusts. REITs. Investing in real estate can offer several benefits, including cash flow from rental income, appreciation in property values over time, and tax advantages, such as deductions for mortgage interest and property taxes. Investors can purchase real estate directly or through indirect methods, such as real estate investment trusts, REITs, which allow investors to invest in a diversified portfolio of properties without owning them directly. Investing in real estate requires careful research and analysis of the local real estate market, property management, financing options, and legal and regulatory considerations. A well-planned and diversified real estate investment strategy can provide long-term financial benefits for investors. Number 5. Commodities. Raw materials or primary agricultural products that are traded on exchanges, including metals, energy, and agricultural products. Common commodities include gold, silver, oil, natural gas, wheat, and corn. Investing in commodities can offer several benefits, including diversification, inflation protection, and potential for high returns. Commodities are often negatively correlated with other asset classes, such as stocks and bonds, making them a useful tool for managing risk in a well-diversified investment portfolio. Investors can invest in commodities through futures contracts, exchange-traded funds, ETFs, mutual funds, or directly in the physical commodity. However, investing in commodities can be risky due to factors such as price volatility, geopolitical events, and weather patterns that can impact supply and demand. Investing in commodities requires a strong understanding of the market, supply and demand dynamics, and pricing trends. A well-researched and diversified investment strategy can help investors maximize returns while managing risk in this asset class. Investing can be an excellent way to build long-term wealth and achieve financial goals. However, it's essential to understand the different types of asset classes and the associated risks and rewards before investing your hard-earned money. In this video, we've discussed several asset classes, including equities, fixed income, cash and cash equivalents, real estate, and commodities. By understanding these asset classes and how to invest in them, you can create a well-diversified investment portfolio that can help you achieve your financial goals. Remember, investing is a long-term strategy that requires patience, discipline, and a well-thought-out investment plan. Always do your research, seek professional advice when needed, and stay focused on your investment goals. That brings us to the end of this video. If you enjoyed this video, please leave a comment and let us know. And don't forget to like and subscribe to stay up to date on all of our new content. See you soon, and thanks for watching.